the 4-year cycle is actually still intact. I think it exists because retail remains a 2/3 owner of the Bitcoin that exists in the world. You do have this institutional bid, which is why this cycle is more shallow than previous cycles. It's also why I think maybe we'll have even more upside in the next cycle than we have in the past, because that institutional bid is real. But I think that's the disconnect. Institutions are in a 10-year super cycle. Retail is still in this 4-year cycle, and we happen to be in that down phase.
The market isn't acting the way it's supposed to. Bitcoin has survived one of the ugliest sentiment collapses in recent memory. Leverage has been flushed out. Retail traders are exhausted. Crypto Twitter has gone from posting laser eyes to posting obituaries. And yet, despite weeks of fear, despite institutional hesitation, despite headlines calling for another lost cycle, Bitcoin refuses to break. Something unusual is happening beneath the surface. For the first time in Bitcoin's history, two completely different groups are trying to price the same asset at the same time. One group sees Bitcoin as a short-term speculative trade that rises and falls every 4 years. The other sees it as a generational asset that belongs in portfolios for the next decade. And according to Bitwise CIO Matt Hougan, that collision may explain everything we're seeing right now, from the surprisingly shallow drawdown to why the next move higher could catch almost everyone off guard. If Hougan is right, then the biggest mistake investors can make today is assuming that Bitcoin's future looks anything like its past. Because while retail investors continue to trade the familiar 4-year rhythm, institutions are quietly building positions for a much longer game. Add in the rise of tokenization, stablecoins, DeFi, and a new wave of institutional adoption, and you have the ingredients for what could become crypto's next major expansion phase. So, in today's video, we'll break down why Matt Hougan believes the 4-year cycle is still alive, why institutional money may be creating a 10-year Bitcoin supercycle, why this bear market feels eerily similar to 2018, and which narratives Wall Street is paying attention to beyond Bitcoin. If you enjoy macro analysis and crypto insights like this, make sure to like the video. Subscribe to the channel, turn on post notifications, and let us know in the comments, is Bitcoin still trapped in a 4-year cycle, or are we witnessing the beginning of something much bigger?
How are you feeling about BTC right now?
Look, I think this is a classic late-stage crypto winter. It feels like that in every way, shape, or form. If you think about what drives the crypto cycle, from my perspective, you get a bull market, you get a buildup of leverage in the system, and then that gets over its skis and the leverage has to be squeezed out. That's exactly what we're seeing in the market right now. We're seeing funding rates that are relatively constrained. We're seeing sentiment gauges that are relatively bearish. We're seeing financial proxies like MicroStrategy and Stretch suffer stress events, which is a classic way that leverage unwinds in the system. So to me, we're getting close to the point where we're finding a bottom. Another tell for me, Alex, is that things have been feeling really bad in Bitcoin for a handful of weeks, but the price hasn't really fallen that much. I keep looking at it, feeling like it's down a lot, and it's actually still hovering here around $60,000. So I think we're in for a continued period of short-term volatility, but I still feel very confident that the end of the year is going to be very positive, and I think we're starting to emerge into the next crypto spring.
How does the sentiment compare now compared to previous bear markets, in your opinion?
Yeah, it reminds me a lot of the 2018, 2019 bear market. So the 2022 bear market was cataclysmic, right? We just went through Q2 2026, and the market was down about 15%. In 2022, in Q2, the market fell, I think it was 55, 60%. It was truly cataclysmic. So it doesn't feel like that. It reminds me a lot of that 2018, 2019 bear market. We had a nice run up in 2017, the first sort of mainstreaming of Bitcoin. And then we pulled back to about $5,000 and we treaded water for a while there. And then we had to pull back further to 3,000 and people got angry and apathetic. That's what it feels like right now. Certainly the vibes are negative. You see a handful of people sort of rage quitting on Twitter. Those are all signs we're nearing the bottom. So this feels exactly like that period to me. And sure enough, we bottomed from that period and went to all-time highs. I think if you look closely under the surface, you can see the green shoots in there. We could talk about some of those green shoots that may be confident that we're going to find that next bull market. But yeah, this feels like the 2018, 2019 bear market to me. We're at the apathetic, angry phase of that bear market. And that makes me think that the next bull market is just around the corner.
What do you think is going on here? Like, how is it possible that this 4-year cycle is still alive?
Yeah, I'll tell you the mistake that we made, which maybe other people in the industry made, which is that we spoke to our core audience. Now, Bitwise serves a wide variety of investors, but our primary audience is institutional. It's financial advisors, it's family offices, it's Wall Street, it's sovereign wealth funds. Those are the people we're meeting to on a day-to-day basis. And for those people, I do think the 4-year cycle is dead. I know there have been a few outflows from Bitcoin ETFs, but generally speaking, the trend is up and to the right. You're seeing net inflows, net adoption. You're seeing approvals on Morgan Stanley, approvals on Merrill Lynch, integration on Wells Fargo. You're seeing all the signs of really a super cycle of institutional adoption. And the reason we said the 4-year cycle was dead was those are the people we speak to every day. And I think we were right. What we missed, which is obvious in retrospect, and I feel sort of embarrassed that we missed this, but what we missed is the majority of Bitcoin is still held by retail investors. And those retail investors are entrenched in the 4-year cycle. It's how they view the world. They're the ones who have historically built up leverage that gets to an excess point, who have historically moved into sort of the financial engineering tools that extend market cycles and get them over their skis. Things like MicroStrategy, things like Stretch, things like Bitcoin treasury companies. And those are the majority of the market. So look, I think the 4-year cycle is actually still intact. I think it exists because retail remains a 2/3 owner of the Bitcoin that exists in the world. You do have this institutional bid, which is why this cycle is more shallow than previous cycles. It's also why I think maybe we'll have even more upside in the next cycle than we have in the past, because that institutional bid is real. But I think that's the disconnect. Institutions are in a 10-year super cycle. Retail is still in this 4-year cycle, and we happen to be in that down phase.
Matt Hougan's comparison to the 2018 to 2019 period is particularly fascinating because it highlights a recurring pattern in every major market cycle. Maximum pessimism often arrives just before sentiment changes. Funding rates are subdued, leverage is being purged from the system, and investors are increasingly apathetic. Yet Bitcoin continues to hold levels that not long ago many believed would be impossible during a bear market. For Hougan, that's not a sign of weakness, it's evidence that the market is quietly building a foundation. More importantly, his explanation for why the 4-year cycle remains intact offers a compelling framework for understanding today's market. Institutions may be accumulating for the next decade, but retail investors still control the majority of Bitcoin's supply. That means 2 cycles are unfolding simultaneously, one measured in years, the other measured in generations. And that brings us to an even more important question. What are the world's largest investors actually seeing when they look at Bitcoin today?
What exactly are the institutions asking about? How do they feel about Bitcoin right now? I know you said that they're generally optimistic and are on a much longer time frame. Do you want to expand a little bit on that and just how the institutions are viewing the space?
Yeah, absolutely. I would say there's sort of 2 groups. They're the people who allocated before the October 10th or the October highs in Bitcoin. And those people have actually been adding to their allocations. So they were pre-sold on the long-term Bitcoin story. They're worried about fiat debasement. They believe that the world is increasingly digital. They believe Bitcoin has an incredible track record of adding to the risk-adjusted returns of portfolios. And we've seen those clients, averaging into the pullback, using lower prices to build larger positions. That's beautiful to see. I will say that the people who didn't quite get over the line before the pullback started, they are engaged in studying Bitcoin, but they have been slow to make that first allocation. They had questions about quantum. They have questions about where the bottom is. They're worried about momentum. They're thinking about the Clarity Act and whether that is a piece of uncertainty that could send the market to yet another low. So they have been slow to adopt. Big picture, they're all still moving forward. Our cadence of meetings and indeed our inflows have been very strong in Q1 and Q2 because they are still in that adoption phase. But there is a little bit of a break. If you didn't get in before the all-time highs, you're actually reluctant to buy until we see a bottom. But the other people who bought are averaging in and buying more. I think there'll be very strong buyers in Q3 and Q4. I do think that is just progressing down the track.
And what about outside of Bitcoin? Are there any other winning narratives or like the green shoots that you mentioned before? Yeah, the institutions are looking at?
For sure. There are probably three that are worth calling out. The obvious one that everyone inside and outside of crypto is talking about is Hyperliquid, which is just a unique secular story. It's been the best performing large cap crypto asset. Money chases returns and a good story, and Hyperliquid has both. So that has attracted some institutional allocation. We've seen that in our BHype ETF that we offer. The second one is tokenization and stablecoins. So institutions are very sold on the idea that stablecoins will be a big deal in the future and that all assets will eventually be tokenized. They don't know exactly how to express that. Does that mean buying Circle? Does that mean buying Coinbase? Does that mean buying ETH? Does it mean buying Solana? What about Chainlink? They're not sure exactly which button to push, but they are very interested in pushing that button. I think because if you're in TradFi, you know just how sclerotic and dumb the underlying financial ecosystem is. So I do think they're looking for replacements, and they look amongst that list of assets for what to buy. The third one, which we're just starting to see, is renewed interest in the DeFi space. The reason for that is you have large firms now, firms like BlackRock, working on things like Morpho. You're starting to see DeFi enter this institutional world. And so there's a little bit of interest there. But mostly it's Bitcoin, it's Hyperliquid, and it's some way to play stablecoins and tokenization. Those are the big three that are attracting interest.
If there's one takeaway from Matt Hougan's analysis, it's that Bitcoin may have entered its most complex era yet. Previous cycles were driven largely by retail enthusiasm, leverage, and speculation. This cycle is different. For the first time, sovereign wealth funds, family offices, financial advisors, and some of the world's largest institutions are participating alongside everyday investors, and they're operating on entirely different timelines. That difference matters. Retail investors tend to ask where Bitcoin will be next quarter. Institutions are asking where it will be in 2035. Retail worries about local tops and bottoms. Institutions worry about fiat debasement, portfolio diversification, and the long-term digitization of global finance. Those aren't just different perspectives, they're fundamentally different investment philosophies. And while Bitcoin remains the centerpiece of the conversation, Hougan's comments about tokenization, stablecoins, Hyperliquid, and institutional DeFi adoption suggest that Wall Street's interest in crypto is expanding rather than contracting. Stablecoins are increasingly being viewed as financial infrastructure. Tokenized assets are moving from theory to implementation, and major firms are beginning to explore on-chain finance in ways that would have seemed impossible just a few years ago. Perhaps that's why this cycle feels so confusing. The old rules haven't completely disappeared, but new ones are being written in real time. Bitcoin may still dance to the rhythm of its 4-year cycle, but the stage itself has grown much larger. And if institutional adoption continues at its current pace, the next bull market may not simply be another chapter in Bitcoin's history, it could mark the beginning of an entirely new era for digital assets. If you enjoyed this video, don't forget to like, subscribe, and share it with anyone trying to understand where Bitcoin is headed next. Turn on post notifications so you never miss an update, and leave a comment below telling us whether you agree with Matt Hougan. Are we still living through Bitcoin's 4-year cycle, or has the institutional supercycle already begun? Thanks for watching, and we'll see you in the next one.